Building good credit from scratch is tough, but it's one of the most important financial steps you can take. Whether you're young and just starting out or you've avoided credit in the past, establishing a good credit score is crucial for your financial health. A strong credit score can open doors to better interest rates on loans, easier approval for rental applications, and even help you land a job. So how do you go from having no credit history to building a solid credit profile? That's exactly what we're going to cover in today's video. Before we dive into today's topic, make sure to hit the subscribe button and turn on the notification bell so you never miss out on our latest personal finance tips. Stay tuned and let's get started. Understanding credit, what it is and why it matters. Before diving into how to build credit, it's important to understand what credit is and why it matters. Credit is essentially your financial reputation. It's a measure of how trustworthy you are when it comes to borrowing money and paying it back. Lenders, landlords, and even some employers look at your credit score to gauge how reliable you are. Your credit score is typically a number between 300 and 850, with higher scores being better. It's based on several factors, including your payment history, the amount of debt you have, the length of your credit history, the types of credit you use, and how often you apply for new credit. A good credit score can save you thousands of dollars in interest over your lifetime. It can help you get approved for a mortgage, secure a low-interest car loan, or even qualify for the best credit cards. In short, building good credit is an investment in your financial future. Step 1. Start with a secured credit card. One of the easiest ways to start building credit from scratch is by getting a secured credit card. Unlike a traditional credit card, a secured card requires a cash deposit that serves as collateral. This deposit is usually equal to your credit limit. For example, if you deposit $500, that's typically your credit limit. Secured credit cards are designed for people with no credit history or those looking to rebuild their credit. Because the lender has your deposit as security, they're more likely to approve you even if you don't have a credit history. Here's how to use a secured credit card to build credit. Choose the right card. Look for a secured card that reports to all three major credit bureaus, Experian, Equifax, and TransUnion. This ensures your responsible use of the card will help build your credit history. Make small purchases. Use the card for small, manageable purchases each month, like groceries or a tank of gas. This keeps your credit utilization low, which is good for your credit score. Pay off the balance in full. Each month, always pay your balance in full and on time to avoid interest charges and late fees. Timely payments are the most important factor in building a good credit score. Monitor your credit. Keep an eye on your credit score as you use your secured card. After about 6 months to a year of responsible use, you may qualify for a traditional, unsecured credit card. Step 2. Become an authorized user on someone else's card. Another way to build credit is by becoming an authorized user on someone else's credit card account. When you're an authorized user, you get a card in your name that's linked to the primary cardholder's account. The primary cardholder is responsible for making the payments, but the account activity appears on your credit report as well. This strategy works best if the primary cardholder has good credit and a history of making on-time payments. It's a great way to start building credit without having to qualify for a credit card on your own. Here's how to do it. Ask a trusted family member or friend. Talk to a family member or close friend who has good credit. Explain that you're trying to build your credit and ask if they'd be willing to add you as an authorized user on their account. Agree on how the card will be used. If the primary cardholder is comfortable with it, you can use the card for small purchases. However, if they prefer, you can agree not to use the card at all. Either way, you'll still benefit from the positive account activity. Monitor the account. Keep an eye on the account to ensure the primary cardholder continues to make on-time payments. If they miss a payment or carry a high balance, it could negatively impact your credit score. Step 3. Apply for a credit builder loan. A credit builder loan is specifically designed to help people build or improve their credit. Unlike a traditional loan, where you receive the money up front, with a credit builder loan, the lender holds the loan amount in a savings account while you make payments. Here's how it works. Apply for a credit builder loan. You can get a credit builder loan from a credit union, community bank, or online lender. The loan amount is typically small, ranging from $300 to $1,000. Make regular payments. You make monthly payments over a set term, usually 6 to 24 months. These payments are reported to the credit bureaus, helping you build a positive credit history. Access your funds. Once you've made all the payments, the lender releases the loan amount to you, often with some interest. By this time, you should have established enough credit history to qualify for other types of credit. Credit builder loans are a safe way to build credit because there's no risk of accumulating debt. The loan amount is locked away until you've made all your payments, so you can't spend the money until the loan is fully paid off. Step 4. Pay all your bills on time. While credit cards and loans are the most direct ways to build credit, paying all your bills on time is equally important. This includes rent, utilities, phone bills, and any other recurring payments. Here's why. Indirect impact on credit. While these payments aren't typically reported to the credit bureaus, some utility companies, landlords, and cell phone providers do report payment history. Even if they don't, missing a payment could result in your account being sent to collections, which would hurt your credit score. Good financial habits. Consistently paying your bills on time helps establish good financial habits. It also ensures you're never in a position where you need to take on high-interest debt to cover missed payments. Consider setting up automatic payments or reminders to ensure you never miss a due date. Timely bill payments are a crucial part of building and maintaining a good credit score. Step 5. Keep your credit utilization low. Credit utilization refers to the percentage of your available credit that you're using at any given time. It's an important factor in your credit score, accounting for about 30% of your FICO score. Here's how to manage your credit utilization. Aim for 30% or lower. Ideally, you should keep your credit utilization below 30%. For example, if you have a credit limit of $1,000, try not to carry a balance of more than $300 at any time. Pay off balances regularly. Pay off your credit card balances in full each month to keep your utilization low. If you can't pay in full, aim to pay down as much as possible. Request a credit limit increase. As your credit history improves, consider requesting a credit limit increase. This can help lower your credit utilization, but only if you avoid increasing your spending. Keeping your credit utilization low shows lenders that you're managing your credit responsibly, which can positively impact your credit score. If you're looking to level up your personal finance game, make sure to visit my channel for more valuable content. And don't miss my previous video titled, Before You Get a Pet, the real financial breakdown you need, where I dive into the true costs of pet ownership. See you there. Step 6. Monitor your credit regularly. As you work to build your credit, it's important to monitor your progress regularly. Checking your credit report and score helps you catch any errors or signs of identity theft early and ensures that your efforts are paying off. Here's how to monitor your credit. Check your credit report. You're entitled to a free credit report from each of the 3 major credit bureaus once a year. Visit annualcreditreport.com to access your reports and review them for any inaccuracies. Use credit monitoring tools. Many banks and credit card issuers offer free credit monitoring tools that provide your credit score and alert you to changes in your report. These tools are a great way to keep track of your progress. Dispute errors. If you find any errors on your credit report, such as incorrect account information or late payments that you know were made on time, dispute them with the credit bureau. Correcting errors can improve your credit score. Regularly monitoring your credit ensures you stay on top of your credit building journey and catch any potential issues before they become bigger problems. Step 7. Diversify your credit types. A diverse credit profile can boost your credit score by showing lenders that you can manage different types of credit responsibly. This is known as your credit mix, and it accounts for about 10% of your FICO score. Here's how to diversify your credit types. Start with a credit card. As mentioned earlier, a secured credit card is a great place to start. Once you've built up some credit history, you can apply for an unsecured credit card. Consider an installment loan. In addition to a credit card, which is revolving credit, Consider taking out an installment loan, such as a personal loan, auto loan, or student loan. This adds variety to your credit mix. Only borrow what you need. While it's good to have a mix of credit types, don't take on debt just to improve your credit score. Only borrow money when you truly need it and are confident you can repay it. A diverse credit mix shows lenders that you can handle various types of credit, which can positively impact your credit score over time. Step 8. Be patient and consistent. Building credit from scratch takes time and consistent effort. It's important to be patient and not get discouraged if your progress seems slow. Remember, your credit score is a reflection of your long-term financial behavior, not just a few months of activity. Here's how to stay consistent. Stick to good habits. Continue to make on-time payments. Keep your credit utilization low and monitor your credit regularly. These habits will pay off in the long run. Don't apply for too much credit at once. Each time you apply for credit, a hard inquiry is added to your credit report, which can temporarily lower your score. Avoid applying for multiple credit accounts in a short period. Celebrate small wins. As your credit score improves, take a moment to celebrate your progress. Whether it's getting approved for your first credit card or seeing your score increase by a few points, these small wins add up over time. Building credit is a marathon, not a sprint. With patience and persistence, you'll be on your way to a strong credit profile. Step 9. Protect your credit. As you build your credit, it's important to protect it from potential threats, such as identity theft and fraud. A single fraudulent transaction can undo months of hard work, so taking steps to safeguard your credit is essential. Here's how to protect your credit. Use strong passwords. Make sure all your financial accounts are protected with strong, unique passwords. Consider using a password manager to keep track of them. Enable two-factor authentication. Whenever possible, enable two-factor authentication, 2FA, on your accounts. This adds an extra layer of security by requiring a second form of verification, such as a text message code in addition to your password. Freeze your credit when necessary. If you're not planning to apply for new credit anytime soon, consider freezing your credit reports. This prevents lenders from accessing your credit report without your permission, making it harder for identity thieves to open accounts in your name. By taking these precautions, you can protect your hard-earned credit and maintain a strong credit profile. Step 10. Keep learning about credit. Finally, building credit is just one part of your overall financial education. The more you learn about credit and personal finance, the better equipped you'll be to make smart financial decisions. Here's how to continue your financial education. Read books and articles. There are countless books, articles, and blogs dedicated to personal finance and credit building. Make it a habit to read and expand your knowledge. Watch educational videos. YouTube is a treasure trove of personal finance content. Subscribe to channels that offer valuable insights and tips on managing your credit and finances. Talk to a financial advisor. If you're ever unsure about your credit or financial situation, consider talking to a financial advisor. They can provide personalized advice and help you navigate any challenges. The more you learn, the more confident you'll become in managing your credit and overall financial health. And there you have it, how to build credit from scratch. By following these steps, you can establish a strong credit profile that will serve you well throughout your financial life. Remember, building credit is a journey, not a destination. It takes time, effort, and consistent good habits. But the rewards are well worth it. Whether you're just starting out or looking to improve your credit, these tips will help you take control of your financial future. And if you found this video helpful, don't forget to like, share, and subscribe for more personal finance content. Together, we can build a solid foundation for financial success.